Sir, you had a remarkable journey in shaping Indian capital markets, and I'm so excited to be able to dive into that with you here today. So, sir, I'd love to begin by asking that BSE is one of the oldest stock exchanges in Asia, and it recently celebrated its 150th year. So, could you please briefly take us through some of those early day stories and any milestones or historical journey that the exchange has seen, and how has it had an impact on you when you joined?
Whatever actions we do, there is always one question which drives us. What is in it for me? The reply for that question varies from individual to individual. But typically, when this question, what is in it for me, comes, what is in it for my pocket becomes a very important element. World over, a profit motive, the importance of capital, the insufficiency of one's own fund gave birth to joint stock companies with limited liability. So the first in the world to be born was not stock exchanges. Actually, it was the concept of stock and the shares.
Right.
In a way, it commoditized benefits of profits. The moment you say commodity, it has to be traded. If it has to be traded, there has to be traders. Then stock traders were born. And they started calling themselves brokers. And they formed an association. The association was mainly formed not for furthering their cause alone as important motive, but to prevent others from entering into that association. Many of the young aspiring minds who wanted to become stockbrokers could not become stockbrokers. I'm not talking about India, I'm talking world over. Once you have an association, and which is very democratic, in what sense? By the brokers, of the brokers, and for the brokers. The world realized it is not just like any other commodity trading. It has a very big economic function. It needs to be regulated. It cannot be just self-regulatory. There is a significant connection between this activity and economy because this is commoditizing capital. Capital is important for employment. Capital is important for consumption. Capital is important for income. Capital is therefore important for economic growth and therefore for GDP. It has to be regulated. So the regulators were born and then the regulations were born. This history is true in every country. True in India also. And thus, BSE was born as a native share brokers association 150 plus years before, and which got rechristened as BSE. Beware, the motive was profit for a few pockets, because entry for others were not permitted.
Yeah.
That's not the stock exchange. That's not the stockbroker we have today. Life has changed. In this 150 years, today when people talk about many things, they say, this is speculative, there is scam here, there is loss of money. When you churn a milk ocean to get nectar, getting poison out of it is unavoidable. Every churning of ocean for getting nectar will always have some poison coming out. That's been the case with stock markets in India. It's just not in 1992 you had one Arshad Mehta scam. There were 24,000 other issues in the past as well. And with everything, the regulation should have gotten shaped up. Unfortunately, there was no regulator till 1992.
Correct.
When I ask students, typically, what do you remember of 1992? The first reply that comes is Arshad Mehta scam. Do you know why? Bad memories are stronger than good memories. In 1992, many other good things happened. Financial market reforms in the form of capital market reform and banking reform Regulatory reform in the form of birth of regulators and technology reforms. The word telecom was born. Before that, it was telegraphy and telephony. All this had a massive bearing on the way the stock exchanges evolved post that. Post that, the stock exchanges became digital. There were 22 plus stock exchanges. Mainly, they got consolidated into two. There were 7,000 plus stocks trading for 2 hours, very limited number of trades. Trade will happen today. We will not know when the settlement will happen. So this has been the evolution. In the process, stock exchanges, which were once brokers' association, preventing any professional from coming in, became a free to enter, free to exit model. Many professionals who had aspirations of making a change to the market, one is sitting in front of you, not this side, on the other side, became young entrepreneurs who wanted to come into the market and make a difference, and they were able to get in. Because free entry, free exit, no card value, deposit based. When you want, you will continue as a member. When you don't want, you will take your deposit and go away. On the pipe membership, not that quota based, and digitalization from a place where people used to congregate to trade, which we used to call as ring. Well, we also call in circus some place as ring, where animals play. Here also animals used to play. Bulls, bears, this, that. And it was Animal Raj, and it changed. And there came democratization of access to markets, to info. Today we tell people, you want to trade a stock? Don't ask for tips. Go and make a research. Whether that stock is good, bad, ugly. Because all information about that stock is available equally to all who pay for it, who do not pay for it, who can use it, who cannot use it. Everybody gets free access. Now, from the broking ring to the broker's office and then to the laptop or desktop of the investor at his office, to his pocket in the form of a smartphone, everything migrated. Today, nobody worries about safety of trading in stock exchanges. What has stock exchanges become now? It's no longer an individual profit-oriented entity. It's public good. It has capital creation capability, liquidity provision, risk transfer, democratization of access. What it is indirectly doing? It is building trust. It's building nation. That's what has been the transformation of this 150 years.
Absolutely. Wonderfully said, sir. So how has Bombay Stock Exchange contributed to the Indian economy and the capital market beyond just capital formation and fundraising that is done by companies through it?
So it is just not fundraising or capital creation alone. When the capital gets created, it has to be traded.
Right.
So that is where the democratization of access comes. Given the topic of Viksit Bharat, this country, which has so many strategic important things. One, your very location in the Indian Ocean through which most of the trade goes. This profile, demographic profile, where more than 60% of the Indians are going to be in income earning group for the next 2 to 3 decades, their median age being 28, their consumption capability being very high, and today a very diversified trade relationship is what is evolving with recalibrations of global relationships. All this makes this country potentially very, very well suited for even higher growth. The last quarter's GDP growth was first quarter 7.8%. If you take average GDP from 1991, it has been going at 7%. It's a catch-up growth India is making. IMF says on a PPP basis in 2030, you will be a 21 trillion economy. And if you use the same factors and extrapolate, by 2038, on PPP basis, you will be a 35 trillion economy. And Niti Aayog says by 2047, I should be at least 30 trillion economy. Market cap and GDP has a very, very good relationship. There is a relationship of 1.5 to 1.7 at least. So I should be therefore a 50 trillion economy, market cap by 2047. Will the 5 trillion market cap today will have, because of multiple, will become 50 trillion? Impossible. So how this is going to happen? Because of many of these gentlemen are going to be starting their own enterprises because of their entrepreneurial capabilities, and they are going to grow India into the direction of 50 trillion.
Couldn't agree.
And which is going to provide the base? The stock exchange is going to provide the base. That is the role of stock exchange.
Super. Sir, in terms of the retail participation and investor awareness, what kind of opportunities and risks do you see there in terms of basically educating individuals to make more informed financial decisions in the stock markets? What kind of initiatives do you think the Bombay Stock Exchange has already taken? What do you think the retail investors or individuals or youth in this room should take on their own as well? Because it comes from a lot of self-ability and curiosity as well to want to know better and do better instead of just blindly putting in the money and acting a bit irrational. So what do you think would be the role of an exchange as well as an individual in improving their financial awareness? Because that has to equally walk hand in hand with the growth of the country.
I'm going to quote something in Sanskrit with your permission.
Of course, sir, please.
There was a poet called Banapatta. Ati gahanam tamo yavvana prabhavam daruno lakshmi mada vilasaha ati thivro dharpa daha jwaroshma. It's mainly meant for youth. That's why I am making these 3 sentences. Yavvana prabhavam. The greatness of youth as a negative side. What is the negative side? Ati gahanam tamaha. Tamaha is darkness. Gahanam tamaha is deep darkness. What you do not do in deep darkness, you are not able to see. So you do not know what you are doing, and you do not know what others are doing. You are blindfolded, thinking that something else is doing something. That's what is darkness. In darkness, most of your senses are covered totally with darkness, and only apart from your own self-existence, nothing else is there for you to perceive. Youth can make you do that. So you have to be careful. Daruno Lakshmi Mada Vilasaha. Lakshmi is wealth. Mother is the intoxication arising out of it. Vilasaha, the impact of it. The impact of the intoxication arising from the wealth, Daruna, means what? Very painful. For whom? Not for yourself, for all the others around you. You will make the life of everybody around you painful because with youth you have wealth and you are arrogant, adamant. And you think you are right and you do not know what others are doing because you are in deep darkness. Ati tivro dharpa daha jwara ushma. Ushma is heat. Daha is because of the fire. Which daha? Dharpa daha. One fire arising out of your arrogance and haughtiness. That is very dangerous. It's very severe. Our youth needs to be knowing about it. They are youthful. They will start earning money. They will have money in their hand. They will feel that they are the top of the world. In this, they could be in actual darkness without knowing they are in darkness. And they may do things which they normally should not be doing. This is more important when it comes to investing in markets. How typically today I find many people, particularly retail investor investing, their neighbor tells that their friends' sons, mother-in-laws, sisters, father-in-laws, grandsons, servant maids, some known person, such a long chain. He bought this share. When he bought it, was just 2 rupees. Today, do you know what is the price of it? 200. Without his friend realizing, he opens his mobile and takes his app and buys that stock. Is it investing?
So it's gambling.
It's not even gambling. It is idiotic behavior. The same person, when he goes home, his mother tells, this is a favorite example I quote in every college. His mother tells, go and buy 1 kilogram of brinjal and gives him 30 rupees. And she says, be careful, good brinjals lekar aana. If you bring bad brinjals, no food for you. This fellow lives the brinjal life like this, as if he is mounting a prism in a prism table and rotating it for spectrometry, and sees it, rotates it 3 times every brinjal to see whether there is any black spot. 10 brinjals, 15 brinjals, 1 kilo, 30 rupees. So much of effort. Putting all the life in your work for 8.5 or 10 hours in the office, with all the difficulties with your boss, you made some money and saved some of it. You are investing how? Because your neighbor's friend so-and-so made in 10 days 2 to 200 rupees. Is that investing?
Okay.
That is what I am worried. When retail investors come to the market and they do this, there is a problem. The same fellow, if he buys a stock and it goes up, will go and brag to the neighbor. I knew it. You know what? I have a special skill in identifying great stocks. I just saw it and I knew it. To all the gullible neighbors and others, he will be spreading this news. When he loses money, what will he tell? Brokers are bad, SEBI is bad, advisors are bad, regulators are bad, exchanges are bad. Who is good? I am the only innocent fellow walking in the dark alleys of the street where these Draculas with big teeth waiting in the dark alley to just pounce on me and drink my blood. Is that correct? So that's what I am worried about. My information to all the investors is, understand what you trade and trade only what you understand. Very simple language. What the exchange is doing about it. We conduct around 15,000 investor seminars every year. We cover around 800,000 people. Lot of information about the corporates regulatorily. The moment the decision is taken by the corporate need to be made available democratically across everybody through the exchanges, listing websites, to all investors, big, small, rich, poor, whatever it is. There are portals where there can be complaints about brokers, about stock exchanges. Directly it goes to the regulators, and from regulators it comes to us because there can be an oversight by the regulators as well. So we made small snippets as YouTube videos. We call it as Dr. Mane videos, and we put it across in our website and in YouTube. More than 10 crore people have seen these videos. These basically tell what you should do and what you should not do. These are some of the things that we do. Apart from that, whatever our tough schedules are, anybody who tells that there is a college here, would you like to give any lecture to the students? I immediately say yes. Why? This is future India. This is a spent force. This will retire and go to a corner of a room soon. But this is going to blossom. This country's dream and aspiration of a 50 trillion market cap or 35 trillion economy is lying on the great broad shoulders of everybody in this room. This room should be much more responsible. So talking to this crowd and telling only one sentence: trade what you understand, understand what you trade. What you do not understand, do not trade. That's the meaning. I don't want to put it negatively. I want to put it very positively. Trade what you understand, understand what you trade. And you have everything available with you for understanding what you want to trade. The next important thing what I want to join across to it is this. There are ways and ways by which you can invest and trade. They should put money in mutual funds. Go to a wonderfully good AMC. There are 48 of them. You choose your good AMC. Use your yardstick. How much of AUM is there? Based on that, in a large cap fund or in an index fund, put your money. Index has been giving a very good return, double digit, 16-17% over long years of CAGR. You can invest in it. Don't become greedy to think overnight you should become a trillionaire. So if you put your money into these type of mutual fund schemes, you are safe till you learn, till you understand what you want to trade. This is a good starting point. And this helps my country, your country, and the economic growth. So that is what I would give as a suggestion to my young friends here.
So, considering the phenomenal economic growth of India and the technology driven enabling factors for the financial growth and inclusion, such as eKYC, robo advisors, ease of investing through mobile apps, etc., where do you see our Indian capital market in the next 5 years and its impact in a developed India, Vikshit Bharat, by 2047?
How it will look like, very difficult to predict, because 5 years before this will be the status of BSE, nobody could predict. Human capabilities are very linear extrapolation. We try to look through our eyes everything. Eyes means light. Light travels in straight line. We have no capability other than linear extrapolation. Life is not linear. Life is curvilinear. So extrapolations are wrong, but clearly directions are evident.
Yeah.
Direction is the stock exchanges and financial markets are going to be much more advanced when we are talking about Viksit Bharat, not only just in terms of capital, market capitalization. There are a lot of products today in India, they are not very active. Debt market is not very active. If a debt market becomes active, if you have interest rate curve, which is vibrant across various timelines, then you have a clear interest rate curve. You will have a risk-free curve and a risky curve, AA curve, AAA curve, B plus curve and whatnot. Then you will be able to ascertain risk premium associated with debt. That gives rise to credit products, that gives rise to interest rate derivatives and interest rate products. Lot of OTC type of products, which are slightly versatile but more complex products. Simple to complex, there is a lot of things that has to happen. That's first thing I am seeing as future. Second is penetration. Today we are talking about 75,000 distributed, 48 AMCs and 75 lakh crores of AUM or whatever it is. Given the size of Indian market, these are all nothing. We are talking about 23 crores investors into the Indian markets, 23 crores UCC. Unique numbers will be 10 to 11 crores. For the population that we have, this is nothing.
Very less. Yeah.
So this penetration is another thing which I am seeing has happening. More and more domestic saving coming into the financial market, which today is not happening, is another major area I am seeing. Like this, I am able to see direction. Exactly how it will be, only time can tell.
So, sir, with your permission, if we can open the floor to a couple of questions from the students, I'm sure they'll
More
be
than happy.
Really excited to ask.
More than happy.
Namaste, sir. My name is Sundararaman Singh, and it's my first year here. So before coming here, I started like 2-3 businesses, okay, and I failed. Sometimes I want to be a tech founder. Sometimes I want to create the biggest defense company in this world. Sometimes like a famous celebrity founder. So in my mind, there is one thing clear, that I want to be a founder of anything. What does success mean to you?
आप मेहनत करो, सक्सेस अपने आप जक मार के आपके पीछे आएगा. Was a dialogue from one of the movies. You said you have multiple ideas come and you failed. It takes a lot of courage to accept failure, which you are doing. That means you are a very courageous man. It also means that you are ready to explore. But do you know where the problem is? When you don't succeed is in one thing, instead of shifting to something else, why don't you do a root cause analysis? Why you failed? What you should do to avoid a failure, if you put some energy there, what we call it as RCA in technology development, you will be better off, is my view.
Super.
I have one question regarding the regulatory aspects. So sometimes we observe that company have a profit of 20-30 crores, and within 2-3 years, how come we can get the profits of 100 or 250 crores?
What is the ticket size that you invest?
Right now, I'm just applying the retail.
But why SMEs?
Not only SMEs.
But why SMEs? Is it greed?
No.
That they will have better multiple?
No.
Then why SME?
Sir, I take the fundamental first.
But why SME? There are 5,500 listed corporates. Why you go for SMEs?
Sir, when we search the fundamentals, right, small cap companies have a bigger chances to get bigger.
That's exactly what I'm saying. So you are looking for multiple at a shorter notice. Yeah. So there are 2-3 points. When you churn the ocean in search of nectar, poison will come out. You have to be courageous enough to face poison so that you can get nectar. Bad companies will come. That is not true only for SMEs, even in large listed companies, there are problems. If you are doing fundamental analysis, you will not be able to certify in all main board listed companies, you never found a problem. There also you would have seen problems. I'm not justifying problems. I'm only telling problems could happen anywhere. Why only SMEs should be highlighted by you? And you said thousands of SMEs are coming. I wish they are. Hardly 600 companies I have today. I wish thousands come and I'll be very happy to discard some of them. It's the second observation I have. Third, please do not venture into SME investing by you. It is not meant for retail investors. That's why we have kept the ticket size very high. We want only investors who are able to search and find whether the company is good for them or bad for them, only them to decide and invest. Because there are no research analysts, there are no research papers covering any of these companies. So in the process, expert assistance is not available to you. Unless and until you are an expert and you are willing to take risk, you should not get into SME. SMEs are meant for qualified investors who are able to bet big because they are ready to take higher levels of risk. Fourth, our regulatory setup has been evolving. We were supposed to have a softer touch for SMEs to encourage SMEs to come. With the experience, slowly and regularly, the regulations are becoming tighter. They're talking about profit track record. They're talking about promoter track record. We are talking about the corporate governance in that company. All that has started coming in. The criteria for migrating from SME to main board should be same as if it's a main board IPO. So many regulatory changes have already been done and we have requested for more tightening. All this will continue to happen. Notwithstanding all that, it's very important. An investor should be careful while choosing any company whatsoever, including SMEs.
We're really thankful to you. I really appreciate you coming here. And it's a big honor, personally for me as well, to be able to discuss and interact with you. One of the biggest moments of my life, if I can say that. And of course, I was quite nervous before speaking to you, but thank you so much for making me feel comfortable and answering so candidly and helping all of us understand the ecosystem and the future of India so much more clearly and in a better way. So we'll always be thankful to you for that. And once again, thank you so much on behalf of all of us for coming down here. We really appreciate it, sir. Thank you.
Thank you so much for having me and for the patient listening.
Thank you.